Let me now invite Mitesh. Mitesh has got an army of trading strategies and some stock ideas which you can trade real time and make money on Monday morning. For those who want a tip for Monday morning, let's put our hands together for Mitesh Thacker.
Thank you, Nikunj. Thank you, Rina, and thank you all of you, ladies and gentlemen, for coming here. It's a slightly change of track. When I was hearing Mr. Mitra and Mr. Choksi, I just felt I was about to go out of business. So from the big macro to the smaller macro, we'll just come down to the micro part of it now. My presentation today will focus on what we call as price, the most used and the most abused term in the stock market parlance. But what I will take you through in the next few minutes is basically, are there any important observations which we can make on the price movement of individual stocks, indices, currencies, commodities, any kind of asset class we are trading into. So we are basically looking at short-term horizon, determining that are there any observations or are there any price points which the market is throwing at us which we need to study. So if people want to enter the market with a very short-term horizon, with a trading horizon or investment horizon, it will not be investment per se, but with a horizon of, let's say, a few days to a few weeks per se. Are there any clues which we can get out of the market action with related to price points which will help us, one, enter our position, which means entering a trade, and as well as secondly, managing a trade or managing a position. Price points, typically when we come on television, you would have heard a lot of chartists and technical analysts talking about price points as a support level or a resistance level. What are these levels? What are these uses? I'll just take you through in brief in the next couple of slides. A support is a level which can be defined as a price point or a level where the force of demand is expected to be stronger than the force of supply. The key word, and it comes as a disclaimer also, bold, italic, underlined, is that it is the force of demand, it is the level where the force of demand is expected. So these are all expectations into the market. Of course, these levels can be violated, these levels can act as a support or resistance, as we'll see further. Similarly, you can just look into a mirror image. A resistance is a price point or a level where we expect the force of supply. And we are talking about very short-term price movements and short-term horizons of people, where the force of supply is expected to be stronger than the force of demand, which typically means that you expect selling to come in at a particular price points. Now, what are these price points? How do we determine them? What functions do these price points play in our short-term trading? We'll just come to that. Having said that, a support level is a level where you expect buying to be stronger than selling. What are the functions or what are the roles a support level can help you determine in the market? So let's say if you are a short-term trader, a support level will help you in initiating a long trade. You would want to buy near a support level rather than sell near a support level. That's the first role. It works as a profit booking target if you have any short positions. And I'll have a lot of examples thrown onto them. Just let's run through these basic theory points. So if you are running a short position, you would want to cut your position or get out of the short exposure near to a support level. A support level will also help a trader fix a stop loss for any kind of long trade. For example, let's say there's a XYZ stock. And what we observe is that the stock trades between the range of 100 to 110. Now, after you observe this movement for let's say a period of 1 week, 2 weeks, 3 weeks, what is the next logical trade which you can put in? So you identified 100 as the support level, right? Is that making sense? It is. Well, so you've identified 100 as the price wherein some kind of buying emerges. Who buys, who is buying is of no concern to you. Basically, that's the price action which is happening in the market and you're trying to record that. Buying near 100 happens, the price goes up. As it goes to 110, you see some kind of supply emerging. We are talking about short-term price movements and you've identified 110 as the supply point or the resistance point. After you've observed this, the next logical step when you're looking for entering into market with a short-term horizon would be to try and buy when the stock is next trading near 100, right? Because your observation, your understanding of the market price action says that near 100 somebody comes and buy, therefore I also will be on the buying side. So it helps you initiate a long position. It also tells you that there should be a stop loss, because if 100 is broken and the price starts to trade below that, which typically means that your original assumption that buying will emerge at 100 is now no longer valid. So you would want to keep somewhere a reversal trade, a stop loss as we normally call it. Let's say at about 98.5 or 99 or whatever number you can arrive at. And the supply point or the resistance level will help you fix a profit target. So if you're entering around 101, you're keeping a stop loss at 98.5, 99, you would want to sell it when the stock reaches levels of 109, 110, which is where you have observed that the selling emerges, right? So this is the kind of broad roles which these levels play, these price points play. There's also one very important technical factor which I would like to comment upon over here. Violation of an important support level, which means that a support level is what? Where we expect the demand to be stronger than the supply. So if that level is violated, typically and in most of the cases, it will lead to further price declines. So therefore, violation of a support level will indicate possibility of a short-term to medium-term downtrend happening in the market or down move happening in the market. If I was to reverse the entire thing, I could probably arrive at functions for a resistance level. It will help you initiate a short position. That's the level where you want to sell or get into short exposure. It will work as profit booking levels, profit booking target for long positions as we have just discussed. It will help you fix a stop loss on the short position which you have taken in the market. Violation of important resistance level will suggest an uptrend and indicate price advances can happen in the underlying stock which you have been observing. I just also focus upon how do we determine these important price points. Typically we look for levels wherein stocks or indices have consolidated, or the underlying, you are looking at commodities also. We also look at important price points. When we study a chart, we look for historical tops and bottoms, levels where prices have earlier peaked out or prices have earlier bottomed out are important levels for us to watch out for. You would have all, when you watch ET now, you would have all heard us make statements about important moving average coming up or the 200-day moving average coming up. So important moving averages are very important in determining supports and resistances. And the last is trend lines. Trend lines is something which I'll not cover over here. It's a different subject altogether. But important lines which determine the price trend. And I'll show you examples of how trend lines can be important in determining price points. So first I've got a weekly chart of IDBI somewhere from 2009 to current levels. We saw big consolidation happening for the first 8-12 months when the stock price was between 130 to about 105. Then a breakout happened. So violation of important supply point led to an up move in the prices. The prices went up from 130 to as high as 200. Then came back again down. 130, which was earlier a supply zone, which was violated, we saw an uptrend, became the level where buying emerged. So this is how price points work. And these levels can therefore help you identify which is the correct level for me to enter a trade on long side or on short side, which is the correct level for me to book profits and exit a trade or keep a stop losses. Because of course when you are trading, you will have loss-making trades, you will have trades which will not work according to what you have done, and therefore you need to have an exit plan in place. I put a chart of IDFC wherein the stock bottomed out at about 45, 46 rupees in 2006. In the 2008 correction, again we saw twice or thrice stock bottomed out around the 45, 46 mark. After it had gone up all the way from 45 to 230, came back and again around 45, 46, wherein the first bottom had been made, the decline was arrested. So this was the point where clearly demand was way stronger. I put a recent chart of Nifty, and this has got two important factors over here. One is the trend line. So if you can see, Nifty after peaking out in September 2010 has been making a series of lower tops and lower bottoms. So if you connect all the tops, what you get is a declining trend line. Now this was acting as a very important supply point. Every time stock would rally around the declining trend line, you will see correction happening in the index. Finally it was violated in the month of February 2012 and we saw an up move. Now that we have gone into some kind of a correction in March and April, what we have seen is that the corrections on the downside are being arrested near the trend line level, as is clearly visible on the charts. The same goes with the 200-day average. Last two downswings in the month of March as well as April, I think have taken support on the 200-day average. We have not seen a close below the 200-day average, though on intraday basis I think we have breached below them. So the first one was 5170. The second one happened on the expiry day of March at 5135 was the low, which was intraday low, but the closing again was above the 200-day average. Thank you for being a very, very patient listener.